Hey guys, it is Julie here with TipRanks. In today's video, we're taking a look at 3 strong buy stocks recently picked up by one Billionaire's hedge fund. So let's get into it. Alright guys, welcome back and thank you all so much for being here. Today we're taking a look at 3 stocks that were picked up by George Soros hedge fund during this past quarter. And all 3 come in with strong buy rating consensus from analysts. So in today's video, we're going to take a look at what it is these companies do and how the analysts weigh in on their stock's future. Just before we get into all of that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well so you can stay up to date with all of our latest videos. All right, let's get right into these 3 strong buy stocks. First on our list today is California-based electric vehicle maker Fisker. Their stock trades under the ticker FSR and is currently priced at $21.70 per share. Now, Fisker's cars aren't even on the road yet, but they are making waves. They're preparing to jump full on into the consumer automotive segment and unveiled their Ocean fully electric SUV earlier this month at the 2021 LA Auto Show. The company has already begun taking pre-orders on the vehicle as well. They are working towards having 4 different vehicle offerings by 2025, with the Ocean, of course, being the first of those. They're targeting an annual volume of approximately 200 to 250,000 units by full year 2025. The Fisker Ocean is on track for an expected launch by November 2022 and is a true mid-size SUV with an up to approximately 350 miles all-electric range. The MSRP comes in the mid $37,000 to $69,000 range. And that price range comes in quite competitively when looking at other EVs as well as ICE SUVs. You can see that they are second from the top there with their low-end range at $37,000. Soros Fund Management recently opened a new position in Fisker, picking up over 317,000 shares worth over $6.26 million. Weighing in on the analyst side of things is Dan Levy from Credit Suisse. He says that Fisker's unveil of the production version of the Ocean at the LA Auto Show last week reinforces our bull thesis on the stock. With EV uptake sharply inflecting and the market lacking sufficient model options, Fisker offers a compelling value proposition, sleek product at a high volume price point with a de-risk path to market. Reaching start of production for Ocean next year, even if the vehicle isn't profitable initially, may be enough to drive significant upside for the stock. Dan is one of 8 analysts that have a current rating on the Fisker stock, and it does come in as a strong buy based on 6 buy ratings and 2 holds. The average price target comes in at $26, which would be an upside potential of over 20%. We do have a couple buy ratings with a downside now, as those price targets have already been surpassed, and 1 hold rating with a downside of 17%. On the high end, we have a recent rating from 12 days ago at the $40 price point, which would be an 82% upside potential. For the second company on our list, we're moving over to the largest natural gas producer in the US with EQT. Trading under the ticker EQT, they're currently priced at $20.96 per share. They operate in the gas-rich Appalachian states of Pennsylvania, West Virginia, and Ohio, with 1 million acres of land holdings in the Marcellus and Utica shale deposits and 19 trillion cubic feet of proven natural gas reserves. The company is well positioned to gain from the current regime of rising gas prices. If EQT were a country, they'd actually be the 12th largest producer in the world. They currently have an over $10 billion of free cash flow generation through 2026. On the ESG side of things, the Appalachian Basin where they operate is one of the lowest emitting basins domestically and internationally. With EQT being the largest natural gas producer in the US, they have actually one of the lowest GHG emission intensities of all producers. EQT shared their most recent earnings report on October 27th. The company's revenue came in at $1.79 billion, reversing the year-ago quarter's $255 million revenue loss, while the earnings per share of 12 cents was up from a year-ago loss of 15 cents per share. Looking forward, management boosted this year's guidance on free cash flow upward by $200 million. George Soros Fund also opened a new position with EQT, purchasing over 530,000 shares for a holding worth about $11.4 million. One analyst weighing in on the EQT stock is Vincent Lovaglio from Mizuho Securities. He says that gas realizations were better than expected, low end of full-year CapEx guidance is down slightly, full-year operating cash flow guide is higher on the commodity rally and in line with our full-year forecast, and the company optimized firm transport agreements expected to lower unit gathering while improving realizations. He also believes that the company will start returning cash to shareholders sooner rather than later, believing EQT is positioned to announce a cash return framework early next year. He is one of 9 analysts that have a current rating on the EQT stock, coming in with a strong buy with 9 buy ratings and 2 holds. The average price target comes in at $29.64, which would be an upside potential of over 41% for this next year. Taking a look at our detailed list of analyst forecasts, on the low end we have a hold rating that still has an upside of 9.5%. Looking at some of our more recent buy ratings, we have 2 at that $35 price point, which would be an upside potential of over 66%. And last but not least today, we're going over to San Francisco-based personal finance company SOFI. Trading under the ticker SOFI, they're currently priced at $18.35. SOFI is a one-stop shop for finances. They offer a full range of products from banking and investing to loan products, including personal loans, home loans, auto loan refinancing, and private student loans. Their strategy is focused on the member experience and offering a full suite of products that leverage the FSPL, or the Financial Services Productivity Loop, where building trust and a relationship in the first product drives success in the next. They're building their products so that they are better when used together. And they are one of the only companies providing this types of solutions in one app. Earlier this month, SOFI provided their third quarter earnings report. The company recorded year-over-year member growth of 96%, reaching a total of 2.9 million. Of that growth, 377,000 new members were added in the third quarter, making the quarter the company's second best ever for member increase. They also saw continued momentum in their product category, with 108% year-over-year growth to 4.3 million products. Their adjusted net revenue came in at $277 million, beating the company's previously published guidance high end of $255 million by 9%. The company has also applied for a national bank charter, which would bring it into the world of traditional banking. Soros opened a new position in SOFI, purchasing about 177,000 shares worth approximately $3.22 million. Also weighing in on the SOFI stock is analyst Sean Horgan from Rosenblatt Securities. He highlights several positive developments from their latest earnings, including their digital influencer partnerships, including a TikTok campaign that drove more than 8 billion views, their new referral program success, and the success of cross-buying between money and investment members, and the lending segment hitting a record of 215 million. The SOFI stock currently has 6 analyst ratings, coming in as a strong buy based on 5 buy ratings and 1 hold. The average price target comes in at $26.33. That would be an upside potential of over 43%. We do have a hold rating with a $19 price target, which would be a slight upside over 2%, and a couple price targets at the $30 price point, which would be a growth potential of over 61%. So there we have 3 strong buy stocks, all recently picked up by George Soros hedge fund, and with some pretty attractive double-digit upside predicted by analysts. Now you guys know I always love hearing from you, so let me know your thoughts on these 3 stocks in the comments down below, and which is your favorite pick for some future growth. Please always keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Please make sure you're always doing your own research and due diligence before making any investment decision. If you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. Have a wonderful day, and I'll see you back here next time.